Hey everyone, I'm Tanya Stanley and welcome to my channel. So today's video is on finance. November being the financial literacy month, it's the perfect time to release this video where we talk about and emphasize on the importance of talking about finance. Most people avoid talking about this subject deliberately, and this is because we've made money taboo, either because we are embarrassed by our own financial positions or because we think there is nothing more private to talk about than our own personal finance. That view is perfectly logical because nobody wants to talk about finance, right? And after all, it's not called personal finance for no reason. But even though it is logical, is it a good idea? Talking about finance is about transfer of knowledge and your life experiences. It's about getting new information and building on your confidence on finances. If your financial decisions has the potential of impacting others, people who are close to you, especially your family members or your relatives, then talking about money is important too. And that's exactly what this video is about. In this video, we are talking about the importance of talking about finances and the consequences of not. The speaker that we have today is an expert on finances, budgeting, and investment. It's Raji. So, Raji is going to talk to us and introduce us to the basics of budgeting, the basics of investing, and the basics and the importance of talking about finances. So, if you're interested, then please keep watching. Hey everybody, welcome to our third webinar. So today our speaker is finance and budgeting expert Raji. Thank you so much for Raji and welcome to our meeting.
Thank you, Tanya. Thank you very much. Thank you for inviting me to this session, and I'm really glad to be here. So hello, everyone who is here. Thank you so much for attending this webinar. And we are going to dive straight into what we're going to cover. And also, I'll just quickly take you through who am I and what do I do?
I would like to ask you a few questions, Raji, before we
Sure.
dive into it. So, Raji has been someone who posts a lot about investing, about budgeting, about finance. And one of the reasons we even interacted and started talking to each other was because we wanted to understand and make discussions around finance more acceptable to everybody. And this is something that is like taboo. People don't talk about their finances. They want to show off something that is probably not something that they can afford. And this is what Raji wanted to break out of. She wanted to talk about it. She wanted to talk about the difficulties people face and what are the confusions that they go through. So that really interested me into what Raji had to say. And thank you so much because I know what a busy schedule that you have, and you still managed to take time out during a weekend to come and talk to all of us in our community. So, Raji, how did you get into it? What motivated you to change your mindset and think about investing? Think from another perspective because this is not something everybody thinks about. People don't want to learn more about finance. They don't want to learn about investment. All that they think about is they're broke, and maybe one fine day when they become rich, when they can afford, that's when they're going to start saving, right? So,
Yeah.
how?
So before I go on to that, I just want to completely agree what you just said right now, because finance is such a taboo topic. Like when you sit with your friends, do you ever even talk about, oh, these are the investments that I make, or these are the things that I'm trying to do? We never have that conversation. We never talk about, okay, how can I be better with managing my money? How can I actually save some money? We never have that conversation, which is such a shame actually, because this is what we should in effect be doing, because we're working so hard to make money. We spend years to make money, but we do not want to spend some time to learn how to manage it. Now, coming on to your question of what really got me into it, I have to admit that it's got to do with how my parents taught me, because it's kind. I mean, I really appreciate that right now. But when I was young, I was like, oh my god, I've heard this a million times. But but I really appreciate that now. But I think the first person who I've ever heard, it was my dad, who told me, make money work for you. And now when I hear that, I'm like, wow, yeah, this is what he's been telling me all these years, but it just never got into my head. But so I would say I really got that thing from how my dad and my mom really instilled into me. And of course, over time, I obviously, just like anyone,
Yeah.
have made mistakes, have, splurged money, etc. But you eventually learn, and that, I actually thought this is how everyone is, but over time I realized it's not necessarily, true. It's not that everyone has the same mentality. So that's what really got me to start talking about this. Like, we have to talk about finance. It is such a taboo topic, and the kind of response I've been getting is really overwhelming, because so many of them have been coming back and telling me this is such a great topic to talk about. We need to discuss it. And sometimes when I say simple things, I understand that those make such a big difference. So what motivates me now is these responses that I get, that it just motivates me further to keep talking about this, like keep talking about money, money, money.
It matters when you keep talking about it. At one point in time, it will enter your brain. You'll finally start thinking about it from another
Exactly.
perspective. So that's important as well. And thank you so much, Raji. So let's dive into your presentation and start.
Sure. Shall I share my screen?
Yes.
Right. Can you see that properly? Is that visible, Tanya?
Yes, it's visible.
Okay.
Perfect. Thank you, Raji.
Perfect. Okay, so let's get started. So thank you everyone for joining this webinar. I'm really excited to share my knowledge with all of you today. Thank you very much for joining. So before we dive in, I just want to quickly take you through who I am, a bit of background about myself, and then we will dig deeper. So my name is Raji Kaippallil. For those of you who do not know me, I'm from India, but I was raised in Dubai and I now live in the UK. So if you are living in India, UAE, or UK, I because I've been here by myself and I've these things regarding investment by myself in these countries, I would be able to provide support and help. And I am an engineer by profession. So as you can see, I do not have a finance background, but it was really my interest that led me to explore this area. And the way I saw it was, the more I learned and I dug deeper, the more interested I became. I had more questions and I just kept going. And I'm not going to lie, when I started off, it was intimidating. I did not even know what stock market was, to be honest. I actually thought stock market is some kind of a financial institution in some part of the world which is controlling these companies, and there's something was going on. So that's how naive I was. And I just could not get my head around what a share meant. I did not understand what it was for a company to actually sell their share to the public. I just could not understand these things. But for some reason, I was curious. I really wanted to know what this whole thing was all about, and that got me slowly into it. And when I started off, I'm not gonna lie, it was difficult. It was intimidating. I could not understand the jargons. I could not understand the terms. And when I read an article, it would take me an hour because I was going back and forth to understand what each term meant. I did not understand what equity meant, what bond meant. I mean, those were just too much for me to handle at that time. But for some reason, I still stuck through. I don't know why. I think it was probably the curiosity. But over time, as I slowly started to learn bits by bits, my interest grew. And then I started to take up courses. I started to read books, and it just got really interesting. The more I read, the more I educated myself. I had more questions. I got more interested. And to be honest, that's also the time when I started to discuss these things with my friends or my wider circle. And I realized it was just not me who felt intimidated. Most of us actually feel intimidated when we read all this. And that's when I understood it was not me, or it was not me who was the problem. Not that my understanding was low or I could not understand this. It really was how these all things is just made to look complicated. And that's how I actually ventured out to speak about this to my immediate friends. And then over time, it's just now grown into a platform. I have a platform on Instagram, a page on Instagram, which is called Finance with Raji, and I talk a lot about this. That's really how I have evolved over time. And of course, over the span of these years, I have developed my own goals as well. And my end goal, my biggest goal is to attain financial independence. Now, what that means is I want to have complete freedom of time. I'm not aiming to be a millionaire or billionaire. That's not what my aim is, but whatever it takes for me to be financially independent. Now, if that takes me to be a billionaire, yes, that's my goals. But I really want to have a financial independence so that money should not be the overarching reason I make a decision. It should be independent of it. And to reach that goal, money is only a tool for myself. Okay, so moving on. That was a bit of an introduction for myself, but I'm just going to quickly take you through what we are going to cover. I want to start off with mindset, which I think is the most important topic here we're going to discuss, and then move on to myths of investing. What is investing? Investing versus trading, why invest, and finally how to invest. We will have a Q&A session at the end where I'm more than happy to take questions and crack on. Okay, so like I said, time is very important and I really respect your time. So thank you once again for joining in. But I just want to tell you who this webinar is not for. It is not for you if you're trying to look for a get rich quick scheme. If you think that's this webinar is about, sorry, that's not for you. I mean, this webinar is just not for you. And if you are not willing to learn, if you're not willing to put in the effort to learn and educate yourself, I'm more than happy for you to exit this presentation right now because it's not going to serve you. Right. Okay. So before we delve deeper, I just want to take some time and I just want you to take a moment to just imagine a life where you do not work for money. So you decide to go to work because you want to work, not because you want the money. Or you decide not to work at all. Like you do not want to work, but you're still financially secure. And this is exactly what I'm going to cover today. Okay, so let's dive in. One of the biggest things I really, really want to appreciate is that the reason that you are here itself is the biggest call that you would want to learn about your finance. We have now a big room of 40 people with us, and we all have something in common. That is, we want to get better at managing our money. We want to learn more about finance. And this is the biggest call that you've taken your first step, and all what you need to do is just keep going. So thank you for being here. So be sure to grab a pen and a book to take some notes because I will be sharing a lot of valuable information. Right. Mindset, mindset, mindset. I mean, I truly believe that the biggest factor which influences our success is our mindset. This is beyond our talent, beyond our hard work, or anything else for that matter. I think the rest of it is pretty much secondary. And this is the case with money as well. Like, if you want to build wealth, you must build the right mindset to achieve it. I'm saying that again. If you want to build wealth, you must build first the right mindset to achieve it. Now, if you think about it, most of us are told, that we should just do our studies, graduate from a university, and then work for another, 40 years and then just die. Isn't that what we're told? And when we are working, we're told that we have to save as much as money as possible and keep it under the mattress. So what exactly do? We start working in our 20s, and then we are now become this adult with so much money coming in. So we start spending aimlessly. Well, let me get this straight. I do not have a problem you spending. There's only one life. Definitely, you should spend your money as well. But most of the 20s, when you're in your 20s, you just spend it aimlessly, thinking, oh, you know what, this is a time for me to enjoy. I have so much time ahead of me, and then you just spend aimlessly, isn't it? And that goes on, or probably you might some people, yeah, might actually even save a bit, but that's just very little, and it just goes on. And over time, when you may probably hit your 30s, you are then starting to have probably more responsibilities. You're probably getting married, or you're going to have kids. You're having kids. You're already having kids, and all of that. So then you're like, right, I've got more responsibilities, which means I need more money. So now you are becoming more serious about saving your money. And then, because you want to make more money, you start working really hard, and this cycle continues for, I don't know, for another 40 years, and then boom, done. You're dead. This is what happens to most of us. Instead, why can't we make money work for us? Why should we work for money for our whole lives? I mean, let me get this straight. Yes, you definitely need money to make more money. I'm not saying you can just start somewhere without having money, but you definitely need some money to start making more money, and you should also be willing to put in the work as well. But i'm I'm not going to say as well that, you can just actually from now on sit on a beach, sip a cocktail, and then just sit idle. But if that's what you really want to do, I'm going to tell you how to do this. And for that, you need to make money work for you. And one of the ways that you can make money work for you is investing in the stock market. And before we move on to the details of it, I really, really want to first kind of bust some of these myths. And I'm sure many of us have heard. I myself had inhibitions. I myself was intimidated by different things I've heard from people. And I'm sure you probably would have heard that as well. I mean, let me know in the comments. I'm really interested to listen to the kind of limiting beliefs the beliefs that you have about the stock market. I would love to hear from that. So let me know in the comments. But these reasons, these beliefs might actually be the reason why you are not investing in the stock market. That's probably what is stopping you from investing in the stock market. And which is why I really want to first focus on these, because like I said, it's the mindset. You need to shift your mindset. You need to shift that positive mindset so that you can open-mindedly take all these in and then decide for yourself. If you're going to go ahead listening to all what I'm going to say with the fears and inhibitions about what you have heard until now, which you don't even know is, if that's the truth or not, you're probably not going to take it with an open mind. Okay, so first of all, investing is gambling. Yes, it is gambling if you do not know what you're doing. What is gambling? Gambling is basically you are letting the external factors decide for you, isn't it? You are letting the external factors make that decision for you, and you just leave it to it. You're not actively involved in making that decision. And if that's what you're going to do when you enter into the stock market, yes, you're going to let it gamble. So investing is gambling if you do not know what you're doing. But if you are willing to take the time and effort to learn and understand what it is and make those decisions by yourself, so you're actively involved in making those decisions, then investing is not gambling. And then the other one that I hear is you need a lot of money to start investing. Investing is just for the rich people. Well, we live in a world where we should be really grateful that we're living this era, because that we have made so much advances, technological advances in life, where it's so much easier now to get involved into all of these. And even if you look into the brokerage firms that provide you with the platform to invest, you need very little money to start investing. If you are in the UK, you probably, I think you need like 25 pounds a month. If you are in India, it's just 500 rupees a month. So, which I'm not saying is not a lot of money, but it is not It's not something it's impossible to achieve. It's not something it's impossible to keep aside a month. I mean, it might be a big deal to some of you, but or some of us, but then it's not impossible to keep aside that 25 pounds a month or 500 rupees a month. And stock market is complicated. Oh my God, the number of times I've heard, okay, let me tell you this. Yes, stock market is complicated if you're not willing to learn. Anything in this life is complicated if you do not know how it works. If you have not put the effort to understand what that is, it will look complicated, but you need to put in the effort. I really, really, really want to emphasize on this again and again. You should be willing to learn and educate yourself so that you can get over that fear that stock market is complicated. And to be honest, I really feel like sometimes I think it's made to look complicated for a reason, because if everyone is, like investing and making money of it, I don't think it might have this kind of impact. So it's probably made to look complicated for a reason, but it's really up to you if you want to crack that on. And I think I can tell you from my experience, I did not have a finance background. I didn't I was not taught these things, but I pretty much self-taught them. So if I can do it, just a normal engineer like me can do it, I'm sure any one of you can do this. Okay, so what is investing? So when we talk about investing, so now I'm just not talking about the stock market as well, but when you say you're investing in something, the idea is that when you invest, that's your time or your effort or your money, you expect to receive, or you expect to get something in return. So maybe that's in the form of an income. So you're expecting it to increase in value in the over the span of time and generate an income out of it. So that is what you mean by investing. So you are investing in an asset. So an asset is something that will actually help you, or that will, when you invest your time or your money into it, over time it increases its value, it increases its or probably generate an income for you. And I don't know if many of you might agree to this, but I have actually heard so many people say, "Oh, I have it was such a great investment. I have invested my money in getting that car or that bag. Oh, that was such a great investment." And in my head, I'm thinking, wait, that's not an investment. That is not an asset. It's not going to bring you any money. It's tomorrow when you sell it, that bag of yours, it's not going to give you more money. So technically, anything that takes money out of your pocket, okay, and it does not bring money back is a liability. So example, when you buy a car, yes, I get the fact that you are buying a car for your convenience, etc. But the minute the car hits on road, it's depreciated its value. 10 years down the lane, if you sell that car which you bought, I don't know, for $10,000, you're not going to get $15,000 at the end of 10 years. You're probably going to get probably $2,000. So it's depreciated in its value. It's not going to make you more money. It is actually, you are losing your money there. So that is a liability. And what you need to focus, if you want to make money work for you, is shift your focus into investing in assets. So when you invest in assets, that's when you will be able to make money work for you. So the end goal is to generate an income or make more money by the appreciation of the value of the assets over time. And that, in with time, it will help in creating wealth. Now, investing versus trading. I think even when I started off, for me, when I started off, for me, stock market was, like I said, it was more or less like this place where you buy a share in the morning, and then, oh my God, it's gone really high up in value. In the evening, you sell it, you make so much money, so much profit, and boom, you are a millionaire. Or it could also go the other way around. You buy a share in the evening, it's lost all the value, and then you lose all your money. Well, that was the kind of picture I had about stock market. And which is one side of stock market. I'm not saying it is not, which is referred to as trading. So again, that there are different forms of trading. What I just said right now is intraday trading. I'm not going to go into technical details of it, but there are different forms of trading. So some people do buy shares in the morning. They might sell it by the evening because they think they can make a profit, or they might wait for a few days, few months. So that is referred to as trading. And I'm not saying that there's anything wrong with it. There are good traders out there who are really good at what they do, but they know what they do. They have educated themselves. They have made themselves aware of what their choices are, and then they are making informed decisions. What happens with many people, and I have heard this from many people as well, they it I think it's more the greed to make that money, like money quickly. So you make that money. What you try to do is, you just, without even understanding what's going on, you just go in and then you just start trading. Okay, so as I was saying, so what happens with most of the people is that they just, because they want to make money really quick, they just enter in the stock market. They do not know what they're doing. They just listen to what other people say. They do not know why they're doing it, but they just know they might be able to make money really quick, and they do it. And because they do not know what they're doing, most of the time they end up losing their money. So they have not made or put in that effort to understand what is happening or why is this happening. And what happens, they'll quickly exit. They'll go tell 10 other people, you know what, lost all my money with stock market investing. Like, I've lost it. It's so risky. It's such a gamble. You don't even know what you're doing. And these 10 people will go and tell 10 other people, I know someone who's lost money. Don't get into it. It's such a gamble. It's really gambling. And this is what most of us hear. And unfortunately, we just take it as it is and we just leave it there. We just think, oh, that's not the place for it. It's too risky. And that's it. End of story. We don't give any further thought to it. And you have to keep in mind, the ones that you have advised are probably the ones who have never invested in the stock market, or probably that they did, but they never decided to educate themselves first. Now, like I said, there's nothing wrong in trading as long as you are willing to educate yourself. Now, the reason why I wanted to bring that difference here between investing and trading is because it's important for you to understand that stock market is just not about trading. Now, how is investing different is really in terms of the time frame. So like I said, trading, usually a trader, he or she might hold that particular share for a day, a month, few days, or maybe up to a year. But investing is long term. Now, when I say long term, it is 5 or more years. That's for your long term goals, like, which is why I initially said this webinar is not for the get rich quick schemes. It's just not for those. This requires patience. This requires consistency. And only with time can you build wealth. So the difference between investing and trading is that this is quite long term. And the strategy here is that you are buying it and holding it over quite a long period of time. There are efforts for both of them, but comparatively, the effort required for investing is lower, because you decide what you want to invest in and you just hold it for a very long period of time. Whereas the other one, in trading, you are more actively involved. The way you can invest or trade. So with investing, you could either go directly into the individual shares or mutual funds, which I'll come on to in a minute. And in trading, it's just individual stocks. And risk, I'm not going to say there's no risk. Okay, let me get this really, really clear. There is risk involved, but what you can do to mitigate the risk is make sure you have a longer time horizon, and also that you educate yourself. Like, I've probably told that by 20 times by now, but that's really important so that you know what you're doing. Okay, so now why should you invest? Let me just sip a drink of water. Okay, so why should you invest? I truly believe that everything that you do, every time you do something, you should know why you're doing it. So why should you invest? So if you look into the chart here, I've got in INR and GBP. And this will really help you understand why you should invest. So most of us would have heard this term, but we would have probably not given much thought into it, which is referred to as inflation. Now, if you look into the chart here, in INR, 1 lakh rupees in the year 2020, so which was not too long ago, just 20 years ago, 1 lakh Indian rupees is now equivalent in purchasing power to 3,50,000. So which means if you need to buy something that costed you 1 lakh rupees back, like 20 years back, you need 3,50,000 today. And if it's in GBP, if it's in pounds, it is 10,000 is now equivalent to 16,000, not equivalent, 16,000 is what you would need today. The inflation rate is different for different countries, which is why you would see the difference. In India, it's around 6%, whereas in UK, it's around 2%. So you can see that what you had, like if you had $10,000 with you, that is not necessarily does not necessarily have the same value 20 years down the lane. And this is why you need to make sure you just don't leave your money somewhere. You just don't leave your money in a bank, because what happens when you leave your money in a bank is that you're just letting it erode away with time. Because with time, the value is decreasing. Your bare minimum or your aim should be that your money should be able to keep up with inflation. That's the bare minimum. It should keep up with inflation, because if it does not keep up with inflation, what happens is it will erode its value with time. And that's not what you want, isn't it? And which is why I actually believe that just leave. If you think you are leaving your money in the bank and that's the safest option, that's probably more riskier. That's my personal way of seeing it. I think it's more riskier than investing, because you're unknowingly or unknowingly you are leaving your money just to erode with time. This is something I just wanted to give a quick comparison between someone who's saving and investing, and really help you understand the power of compounding. So as you can see, two different people, they are investing or they are keeping aside the same amount of money every month, and John chooses to leave it in the bank for 3%, whereas Amit chooses to leave it decides to invest in a mutual fund, which gives a returns of 10%. And over a span of 20 years, you can see Amit has almost doubled the amount of money. And like I said, I mean, here I've taken the one on the left is, as per Indian terms, the bank gives around 3%, and the right is UK 0.5%. We all know that's really not the reality. I mean, if you're in the West, in the UK, you're definitely not even getting 0.5%. But you can see, because of just leaving it in the bank, the other person has almost half the money as someone who would have invested in the stock market. And this is really the power of compounding. And if you do not know what compounding means, I can explain like with an example. So for instance, if you put in $100 a month, and if you're making 10% returns on it, then you get $10 as the interest. So you have now 110. The next time what happens is that you are not getting another $10. Instead, you're getting 10% of that 110. So this keeps growing. So with time, which is why I want to emphasize that time is important. With time, you slowly generate that corpus. You slowly start to generate that wealth. Therefore, time is very, very important. That should be your best friend. Okay, so now how to invest. There are multiple ways of you can invest. Like I said, your idea is that you should invest in assets that will generate or make you more money. You should be able to put in your money to bring in back more money. And there are different ways, which like I have shown here. Some of them are stock market. You could invest in real estate. Real estate, again, it really depends on the country that you are investing. So it's not just for everyone, but it really depends on the country as well. And then commodities such as gold, oil, etc. Now, what I'm going to talk about today is about the stock market, and we are going to discuss how to invest in the stock market. So there are two ways you can invest, which is either buying individual shares okay, individual shares of a company, or you could get yourself invested in mutual funds. Now, what I mean by individual shares is that, so let's take, for example, Apple. Now, if when Apple, so Apple has decided, right, the value of the company of Apple is say around $1 million. Don't quote me on that. That's definitely not it. Apple is probably valued a lot more than that. But for example, let's consider $1 million, and Apple decides, we are going to give it out to the public. We are going to sell that shares to the public. So it decides to sell 1 million shares. So for 1 million value of the company, you have 1 million shares, which means for every share is going to cost you $1. Now, I'm going to buy it. Now, what happens, say if I bought one share, over time, I can see that the company is doing well. The company is doing really well. It's producing a lot of profit, it's bringing in a lot of revenue and sales. So what happens over time, people start to think, oh, okay, this company is doing really well. And the demand starts to increase. More people want to get hold of it. More demand increase. I mean, as the demand increases, now that the 1 million shares is already sold out, it's all distributed, people who have not yet got it are thinking, like, if I can somehow get hold of this share, I think it's going to be really good, because over time, this company has so much growth potential. So over time, I'm going to make a lot of money from this. So what do I do? Because I've got one share for $1, I'm going to go and tell someone else, oh, you know what? I can actually sell you my share, but you're going to pay me $2. And the other person's like, yeah, sure, why not? I will pay you, because I think it's going to probably be $20 in a few years' time. And I have spent $1 and I've got now an extra dollar back. So this is how I am working. I'm making more money. And like I said, this demand increases, and with time, the value of that company, it increases, and therefore the value of your each share increases. Now, there are a few other companies which actually even issue something called as dividends. That means if they make a profit, they will share that profit, a percentage of its profit, with the shareholders. So in addition to your shares going higher up in value, you are also getting some amount, a percentage of, depending on the number of shares, it would depend how much you get, but you would be getting some amount of money as dividends. So this is how individual shares work. Now, I'm not going to lie, there's so many companies out there, and it's quite difficult. It is a tedious process to pick which shares you want to invest, especially when you're investing for the long term. You want to be sure that you are investing in a good company, and you just cannot simply just pick one randomly and then just go it. You have to do your analysis. You have to do your research. There is a bit of fundamental analysis that's involved to understand if this company is well or good or not. And it does take some amount of effort and time. But if you are the person, the kind of person who does not want to put in that, or if you do not have that time to put in that kind of effort, or you do not have the interest, then I would say another option that you have to invest in the stock market would be mutual funds. Now, what are mutual funds? So this, I would say it's best to explain with an example. So an analogy would be, if you say, for instance, you want to buy a ticket, a raffle ticket, and that's going to cost you, it's maybe $200. And if you win, you're probably going to get $2 million. That's the prize money. But you do not want to spend $200. It's $200 for a raffle ticket is too expensive for you. So you decide to share this with your friends, and you have all now decided to pool your money together and then buy it. So if you win, you get a percentage of it. But if you lose, you're only losing 20 pounds. Okay. And this is quite similar to what a mutual fund is. I'm not saying a raffle ticket is what a mutual fund is. That's not what I'm saying, but this is just for you to gain that understanding. So in here, so what really happens is, in mutual funds, you are actually pooling your money with others who are interested just like you, and you're going to buy a fund. Now, what is a fund? A fund, as you can see, it's more like a bucket. It's more like a bucket with so many shares that will form a fund. So when you put in some amount of money into it, when to buy a fund, you are buying few shares of different companies. And why is that good? Because you are not investing your money with just one company, but you are investing your money with multiple companies. And this helps you with to mitigate your risk. So in case if something goes wrong with one of the companies, or if it falls in value with one of the companies, you would not be as affected as a person who is completely invested in that just one company. So that's the idea. So this really helps with your risk. It really helps, that diversification helps you to mitigate that risk. And that is what mutual funds help you to. And I would suggest that it is, if you are really new to investing, my path or my recommendation would be that you start off with mutual fund. Over time, get yourself educated, so that, I mean, of course, if you have the time, and also that if you have the interest, then you can probably move on to buying individual shares. And over time, if you still have the interest, maybe move on to trading as well. But for a beginner, I would highly recommend that you start off with mutual funds. And I really like the idea of mutual funds in a way that I like to keep them, or keep into it for the longer term. For my long-term goals, I just like to keep it, because also, I, as much as I love to be, I would love to make more money, I do not want to be losing all of it as well. There is a risk involved, but there's some amount of risk that I'm accepting to take it, but I want to make sure that 20 years down the lane, I do not want to be told, oh, you've lost all your money as well. So mutual funds, in a way, is less riskier. I'm not saying it's not risky, it's less riskier when compared to other individual shares or trading. Okay, so that pretty much brings us to the end of it. I just wanted to close off with a few resources that I thought it's worth sharing. One of my favorite books is Rich Dad, Poor Dad, especially when it comes to getting that mindset. So it's written by Robert Kiyosaki, who is a billionaire. He's a real estate billionaire, and it really helps you with getting your mindset, or shifting your mindset. I wouldn't say mindset, right, but shifting your mindset. And I think it's, as I said initially, and if there's one thing, if I want you to take away from this presentation, it would be the mindset. It is about changing that mindset to think, right, instead of me making money, how can I make money work for me? So that particular book was a really mind-blowing book for me. And if you're interested to get into the investing side to learn a bit about it, I would highly recommend The Intelligent Investor. I'm a bit of a books person, so which is why I've recommended books, but Investopedia is a website. It's a great resource to get your understanding about investments as well. And if you like to watch films, then there's The Big Short, and these are some of my favorite ones, The Big Short and The Wolf of Wall Street. These are great ones, like films to watch as well. Okay, so this is a slide which you've already seen, and I just wanted to close off with how I said earlier, like not working for money. Like, you, instead of you working for money, make money work for you. And that is financial independence. You will get to a point where, when money does all the work for you, that's when you are financially independent. And this, what I showed you right now, is one of the ways that you can be financially independent. So that really brings me to the end of my presentation. And as I said initially, I do have a page on Instagram, which is called Finance with Raji. I do share a lot of valuable content in there, and it pretty much dives in the nitty-gritty of it. So be sure to check that out in case if you're not following me. And of course, if you have any feedback, I would love to hear from you, especially about this webinar, because I really want to improve and help as many people as possible. So I would really, really appreciate if you could let me know what you thought of this and how I can help you more. Thank you.
Thank you everybody for joining. And Raji, once again, this was super duper informative. And I understand, like I said, it's not possible to teach all about finance. I mean, anyone who is doing investment, they probably will never stop learning. So this is something that's an ongoing process. What Raji has done
Exactly.
is just open the doors to you to understand where you can start, or just peppered some sort of knowledge about topics here and there, and we have had questions back and forth. So thank you so much, Raji, for coming and spending time with us. Absolutely love it. Thank you.
Thank you, Tanya. Thank you so much for hosting this. And it was such a pleasure to be here and have this really interactive session. Thank you. And I hope to see you all. And I really, really hope that you are now all pepped up to learn and start investing and become good investors.
And become millionaires.
Exactly. Why not?
Yes,
Billionaires. So good
absolutely.
luck to everyone.
Thank you. Thank you so much.
Thank you. All right.
Thank
Thank
you. Thank
you.
you.
See you. Bye.